Hello guys, you know, a typical situation that I always speak about either in swing trading or in investing. What is this typical thing that most of the beginners, they think it's right but it's wrong? Now what is it? Someone sent me an email and commented on one of my videos, and it says, and he says, okay, I bought a stock at $6 in general. This is the amount he says, not exactly. And then he waited, it goes to $4, but from $4 it goes to $8, and he has a good profit. And this is because he waited. Now, here I will stop in this idea of wait to get profits. This is really a problem, okay? Because the stocks, it doesn't mean when you wait a long time, 1 month or 2 or 3, they can come back. Some stocks will never come back. And those who don't have an idea about risk, they will make big mistakes and big losses. You know, it happened to you that you wait for a stock, it was $6, it goes to $4, and as if you will know, or you have known the future, and you will know that the stock will come back. This is your hope. It's not something that it is real, okay? Even if it goes back, it doesn't mean that each time you buy a stock, it goes back to the price that you bought. This is what you hope for. And this is weakness in trading. I'm not speaking here about investing, because investing, you invest for many years. The stock can come back, and the stock cannot come back, and you make a big loss. So if you understand the idea of risk, you will master any trade that you do. But if you don't understand and you think because of your luck, because you are lucky, and each time you are lucky, this is a big problem that you should fix right now before you get to a big loss and you lose all your money. And I ask this guy, I say, okay, the stock goes from $6 to $4. He told me, because I know fundamentals. I know this company, I know fundamentals, and it will go up. I told him the company has nothing to do with the stock. You are mistaken. Because who buys a stock? They are big hands in the market. It could be mutual fund or pension plans, insurance, banks. These big hands that they buy big chunks of companies, okay? And they can sell big chunks of these companies when they think that the company is not doing well, or it will not do well, or they just decide to sell and to buy another. So you can't control mutual funds because you know about the fundamentals. If every company, there are a lot of companies, thousands of companies that you see, they have good fundamentals, they have good earnings, but their stock, bam, go down for 1 year, 2 years, 3 years. Okay? So it doesn't mean that you rely on fundamentals that the stock will come back. Now I ask him the question, let's say from $6 it can go to $1. What do you do at that time? Do you sell, or do you stay waiting for your stock until it will go up? And there is a funny anecdote about this stocks coming back, is that there is a technical analysis trader sitting with a fundamental analysis investor. And this investor, he was peeling a banana, and then it falls down on his shoe, and the technical analysis trader asked the other guy, why you don't pick it up? He said to him, it will come back. by itself. This is just an anecdote that people say. Now, understand that in the market, nothing is sure. If a company, they say it has good fundamental, you can invest in it, it's okay. But don't think that the price is linked to fundamentals. It is not. The proof of that, you see a well-known, a very famous companies with great products, and we have the test of time, and everybody knows it. But in terms of stock, it does nothing. And you find a tiny company that you put 5,000 or 10,000 in it, and it goes from $1, it goes to $5, to $10, to $16, to $20. And you will make a lot of money that you will never see with those old big companies. Okay? So understand that fundamentals, it's not 100% reliable thing, because it's just investors, they don't have nothing else to look at. They have only this fundamentals of the company. And who file this information to the Security Exchange Commission? Who? Is the company. The company can lie about the information. Because if the company has a problem, they don't want the investors to know about this problem, because if the investors know about the problem, they will, without question, they will sell their shares, and the company will have a real problem in terms of stock. Okay? So understand that it's not reliable. But a price is a true thing. You see it. It doesn't lie. A stock that was $1, it goes to $10. Yes, you see it. It goes to $10. But you tell me, oh, this stock is $1. It will go to $10 because of the fundamentals. I don't believe that. Okay? I don't believe, and I will never believe it. But I have a way to get a signal, and if the market is good for this company, I will buy it, and it can go to $2, $3, $4, wherever it goes. I make profit. Okay? So it's just, you know, just ideas like this. I want just always to explain and to give you details about all these things. At least you always have a second thought, and you think again of what you are doing. Okay? So there are some stocks, some companies, they go down until they collapse and they go bankrupt. Okay? You can see it online. You can see always companies, they go bankrupt. Okay? So they don't tell that much about them before, and then one day they say bankrupt and the stock collapse, and almost all the people who have money there, they will lose all their money. I'm not speaking about people who have $5,000 or $10,000. There are people who put millions of dollars in one company, and it was doing good, and then it collapsed one day. They lose all that money that they have in this company. Okay? So thank you very much for watching. If you have any questions, as usual, send me a private message. This is my website here on the top of the description, and my website for the training. Just send me a private message. If you want just to comment here. Subscribe to the channel to get more videos, and thank you very much.